couples consider economic concerns in their decision to start a family. The overall economy has experienced a major recession followed by an extended recovery period over the last 6 years. The trend of declining birth rates is expected to reverse in the next 2 years by 2014. This is positive news for Crown Crafts and the juvenile products industry as a whole. Crown Crafts is well positioned to maintain positive cash flows through product line expansion, in-market diversification, sales channel diversification, and international growth. Crown Crafts is an industry leader in design expertise and is geared toward product innovation. It has a growth strategy that focuses on both organic and inorganic growth by developing new products and making opportunistic acquisition. Crown Crafts entered the pet industry in 2010 by launching a pet bedding and accessory product line called Neat Solutions for Pet. Management is striving to increase the company's international presence along with increasing its domestic distribution base. The major buyers of Crown Crafts products are mass retailers like Walmart, Target, and Toys R Us. Crown Crafts offers only a minimal amount of online sales, which further makes it dependent on these retailers. These retailers have a huge customer base and tremendous buying power, which gives them the upper hand in the relationship with Crown Crafts. Recently, however, Crown Crafts has started expanding its distribution base to dollar stores, food and drug chains, and international markets. In the highly competitive baby products market, Crown Crafts focuses on infant and toddler consumer product segment and competes with various manufacturers, large and small, branded and private label. The major competitors of Crown Crafts are Carter's Incorporated, Gerber Childrenwear Inc., Kid Brands Inc., Summer Infant Incorporated, Lambs and Ivy, American Baby Company, Batiste Group, and Even Flow Company. The competitive advantages of Crown Crafts are competitive prices, satisfying service to the retailer, attractive styling, and high recognition of products and trade names. A major operational concern for Crown Crafts is its product liability. For example, the company had to discontinue a line of baby swings that had been linked to infant deaths. Although Crown Crafts does not undertake significant investment in technology or research, the company relies extensively on its product development staff to create safe, innovative, revenue-producing products. Crown Crafts could experience a loss of revenues if it is unable to renew its major licenses agreements or obtain new licenses. In fiscal year 2012, over 50% of the company's gross sales were from licensed products, and 38% of those sales were associated with the company's license agreement with Disney. The contract with Disney is set to expire at the end of 2013, and failure to renew this agreement would prove problematic for Crown Crafts. Safety regulations and certifications are significant factors that affect the juvenile industry. Crown Crafts must comply with the Consumer Product Safety Improvement Act, which imposes strict standards to protect children from potentially harmful products and which require that the company's products be tested to ensure that they are within acceptable levels for lead. The company must also comply with related regulations developed by the Consumer Product Safety Commission and similar state regulatory authorities. United States domestic manufacturers and importers of children's products are required to certify that their products meet all mandatory United States Consumer Product Safety Commissions. According to Crown Crafts 10K, Breathable Baby filed a complaint against the company and Crown Crafts infant products in January of 2012, alleging that the mesh crib liner infringes on Breathable Baby's patent rights relating to its air-permeable infant breathing technology. The court ordered the plaintiff to serve the defendant an amended claim chart by 2012. And as for financial risks, as of the quarter ended September 30, 2012, the current and asset ratios of Crown Crafts were much higher than the peers group's average ratio. Higher than average liquidity ratios reflect Crown Crafts' ability to repay short-term creditors out of its total cash. The cash ratio, which is a more conservative liquidity ratio because it leaves out inventories and accounts receivable is lower for Crown Crafts than average. Crown Crafts had a debt-to-equity ratio and a long-term debt-to-equity ratio of 0, while the average of its peers was much higher. One point worth emphasizing is that Crown Crafts does not have any long-term debt, which reflects Crown Crafts' relative conservative financial policy. Interest rate changes will not have any significant impact on the company's financial conditions because the company currently does not have any long-term debt. However, the company can be affected by the fluctuation in exchange rates because of the company's products manufactured in China. As the RMB appreciates steadily against the USD, the company's Chinese supplier could respond by raising their prices. Our 12-month target price of $6.50 is based on several different multiple analysis. We use price to equity, price to book value, enterprise value over sales, and enterprise value to EBITDA, as well as the discounted cash flows method. We project Crown Crafts will continue its steady but slow growth. We believe the multiples represent this steady growth and are a good indicator of the future stock price. Discounted cash flows also represent this growth and the steady nature of incoming cash. The discounted cash flow method derived a share price of $8.14 1 year from now. The discounted cash flow method derived a share price of $8.14 1 year from now. The discounted cash flow method derived a share price of $8.14 1 year from now. We use a risk-free rate of 2.85%, which is the current market 20-year treasury rate. We took a beta of spot 8.1 and 8.29% as our weighted average cost of capital. We believe that 8.29% does not represent the required rate of return for Crown Crafts. Consequently, we have added a liquidity risk premium of 7% over the WACC, forming a discount rate of 15.29%. We assume the discounted cash flow method derived a share price of $8.14 1 year from now. We use a risk-free rate of 2.85%. That's the 20-year treasury rate. We took a beta of 0.81 and 8.29% as our WACC. We believe that 8.29% does not represent the required rate of return for Crown Crafts. Consequently, we have added a liquidity risk premium of 7% over the WACC, forming a discount rate of 15.29%. We assume the free cash flows will grow at a risk-free rate of 2.85% and modeled the free cash flows for 9 years before applying this terminal growth rate. Our price to earnings approach yielded a 12-month target price of $7.36. For price to earnings, we use a multiple of 8.6 times, which was determined by finding the average multiple from Crown Crafts' historical price to earnings ratio. We then multiplied the projected 2013 earnings by this number and divided the number of shares outstanding to find our target price. Our price to book value approach yielded a 12-month target price of $6.16. We use a multiple of 1.47 times. Our projected price over book value ratio. Our price to book value approach yielded a 12-month target price of $6.16. We use a multiple of 1.47 times our projected price to book value ratio because we looked at this ratio from past years and found an average multiple. With steady growth, we predict the multiple for Crown Crafts to be close to its historical average. Our enterprise value to sales approach yielded a 12-month target price of $5.43. For enterprise value to sales, we use a multiple of 0.59%. That was determined by averaging the historical multiple of Crown Crafts. Using this average, we multiplied our projected 2013 sales and divided that by the number of shares outstanding to determine our target price. Our enterprise value to EBITDA approach yielded a 12-month target price of $5.45. For EV to EBITDA, we use a multiple of 634, which was determined by averaging the historical multiple of crown crabs. We then multiplied this multiple by the projected EBITDA for crown crabs in 2013 and divided by the number of shares outstanding to find our target price. Thank you for listening to our presentation.